Okay, I think this is all of us. So, this panel is MEV and Intents. Hello, hello. We can start off with some intros. I'll kick it off. I'm Kaylei. I'm head of BD and growth at Union. Think that's about it. You need to know. I'll pass it on.
Zaki. I'm an NFT influencer.
My name's Noah. I'm one of the co-founders and CEO of NodeKit.
Hey, I'm Connor, the co-founder of Enso.
Hey, I'm Elias, co-founder of Kakarot.
Alrighty. Okay, we're going to start with the first question, a little broad, so y'all can take it wherever you want, but how have you guys seen MEV as a whole evolve from whenever you guys first started crypto?
All right, I can go first. I've been in crypto since 2013. In 2013, I was thinking about MEV, maybe like 2013, 2014. So then we went like 2014, 2015, 2016, 2017, 2018, 2019, and no one was doing any MEV. And we were like, is anyone ever going to do this? Is this ever going to happen? And then 2020, it like started with just like one Ethereum miner started doing some MEV stuff, and then it was like an avalanche, and then there was MEV everywhere, and then no one could stop talking about anything else, and then it became like the MEV mind virus. So I don't know what that tells you about the industry, but that's been my experience.
I think the way that I've seen it evolve is it's become more and more concentrated since I got into it. I would say that I got in more heavily like researching MEV in 2020. So I've just seen it become more and more concentrated, and it seems like
Part of the avalanche.
Yeah. But I would say it's just become more and more concentrated over time. And I think that will only increase. I think that we're more so going to see more institutional capital come back on chain, because we're still not seeing like traditional firms necessarily. We're seeing, well, there's one or two. But we're not seeing as many traditional firms come back into crypto for trading yet. I think with this cycle, we will.
Yeah, I got into Ethereum in 2016. The first kind of MEV was listening to influencer videos that were being posted on YouTube, parsing them and buying those tokens. That was kind of the first ever MEV that wasn't on-chain. In terms of like arbitrage trading, you were able to do this in 2018 and so forth, 2019. You're making 150, 200 a day, right? The alpha was not understanding MEV, your alpha was understanding solidity, right? Now that's changed a lot because now you're professionalized teams. Where do I see MEV going? You know, I think the biggest alpha for MEV is if you see a new chain is launching, go there. Right, day one, you need to have everything ready, need to be there on the test nets, and then just rinse the whole chain for a couple of weeks and then rotate, right? If you're trying to compete on mainnet, good luck, right? BSC, good luck. But new chains, rinse it for a couple of weeks and then move on.
I joined crypto in 2020, and also I was never too close to MEV realms, except when it like touches ZK. The only thing I saw it's a bit different, is I saw there was an era where people were including MEV in their pitch deck as a revenue stream, because there was like a few months where everyone was like, oh, transactions fees are dead, they're going to zero in like less than a month, everyone's going to do MEV. And now I think we're rethinking it a bit. I remember Zaki was saying MEV on Solana is not sustainable, so it's not a long-term thing. And there's the MEV that you want to give to the people, the MEV that you never want to happen from everything being public. But yeah, so now people are not really using MEV anymore as a sales pitch deck. They're using congestion fees, I guess, like Base or something else.
Why is Solana MEV not feasible?
Well, more I was saying that like, the argument for tokens is that like some staking token is like some sort of long-term right to MEV. And this is like a thesis that seems to be mostly like not true in the long run. Like in the immediate term, they're having a staking token can be like inferred as like be a right. Like a staking token translates to being part of the block proposer monopoly, and then you can have a market structure where that turns into a right to some of the MEV, to some revenue from the MEV. But in the long run, we would expect that like the winning applications will internalize all of their MEV.
makes sense. All right, so, and I agree completely with like the concentration and the avalanche that has happened with MEV even in the past, like, honestly, like even year. But when you factor in like FHE, ZKPs, how do you guys see that even evolving the landscape even more from like MEV resistance perspective, but also like intent-based systems?
I think it's still MEV because if, regardless of it's intent-based or something like a decentralized like prover set, if there's a way you can do latency races, then there's some value to be extracted by being first and learning of the first thing and trading off that information first. And there's always going to exist like some kind of MEV as a result of just like price discovery. And if there's an advantage to be first, somebody's going to try and take it.
So my view on this is that it's actually like a much more complicated and nuanced question than most people, I think, realize. Because we've only seen a couple of market structures ever emerge so far, and we don't actually know what will happen in the medium long run. So Ethereum on the L1 layer has like evolved this like very sophisticated market structure in which you have this like builder and relayer community. You have order flow auctions that like the large wallets operate in. In Solana land, you have a similar but not the same like market structure. You have like the dominance of Jito, which provides like a MEV, but like you have like some amount of social censorship against certain kinds of MEV extraction. So the question really is like if as you introduce like a more complex multi-chain world, what market structure will emerge? And I think right now we're actually kind of in this state that is mostly dominated by the fact that like that avalanche has not translated into like you have like a very robust MEV universe with lots of market participants in Ethereum L1. You have a growing marketplace on Solana. And then like for everything else that's cross-chain, you have almost nothing. Like building, like one of the biggest constraints that seems to be in the industry is just that like operational complexity, like the dominant cost for solvers is not cost of capital. The dominant cost for solvers is the cost of operations. The cost of like operating software, interacting with all these different chains, all these different protocols, all these different RPCs. And very few things so there's like, one, is there like even the volume on like lots of different protocols to even justify this? But even if there is the volume, like it takes a long time for the market to like build these services. And like most solver businesses are like two-man shops. And so there's like real limits on like how many things that they can integrate. And so I think we just like don't know how this evolves as order flow grows.
Yeah, I think MEV will never go away. For me, MEV is just pure opportunistic. If you can make money, then make the money. I think we can put many barriers in place and somebody's going to jump over those barriers or break down those barriers, right? I think that's kind of the whole purpose of MEV. I think Zaki brought up a really, really good point in terms of solvers on many, many different chains, right? We're entering this intent world or chain abstraction world, and we're kind of offsetting all of the problems and all of the complexities to what we call solvers without ultimately talking what they will need to do. They'll need to integrate every single chain, understand every single protocol, do inventory management if they would like to on many different chains. And where's the profitability model on that in a world of that, right? If we look at the current solver models on Cowswap, Uniswap X, OneIsFusion, many, many more, these solvers are burning cash. People aren't making that much money, right? People would envision these guys, if they're X-searchers, they would be making a couple of mil a month. It's not happening. Most of these solver teams aren't even break even, because the whole solver model is incentivizing people to go to the lowest point of return, i.e. you say you can get 3K, I say I can get 3.011, stuff like this. And ultimately, some people will even lose money on a trade of their own balance sheet just to get that order flow, right? So it's getting into this weird world of how, not realistic is it, because it is realistic, but how tangible is it for the future of like reliability? Because I see a lot of solver teams are just dropping off now, right? All the guys that were around for like a year and a half, they're now just saying, yeah, we're stopping solving. We're just going to do something else now, because there's no profitability inside of it. Bit off topic, but yeah.
I'm not sure I have a take on this. Maybe just, you mentioned ZK. Probably, I mean, dark pools I think, released on Arbitrum Renegade, I think it's called. Isn't that supposed to reduce at least the MEV of sandwich attacks and so on and so forth that you would get today on Solana? Because you said there's... What?
There's not enough volume to say yet. Okay. I would say that like dark pools in general and any like privacy-based trading solutions, like I'm very excited for them. I think that they're like a great opportunity. Like we have like Penumbra on Cosmos and Renegade on Arbitrum. But there hasn't really been enough volume traded through either of those systems yet to really dictate whether or not that they are like the future of trading privately, or whether they're just another project that is really exciting but might not get the same volumes. So.
Yeah, I mean, I think the like lesson has been a very inefficient market structure on Solana has been had incredible growth, and like we asked the question of like, oh, like I have built this fancy new like MEV mitigating like intent-based DEX thing, and it's like cool. Everyone is trading on Uniswap V2 style X times Y equals K pools on Radium, and it's like cool. Well, are we sure there's adoption for this?
I will do a shout out. Titan Dex, they're launching in a couple of weeks, competitor to Jupiter. So you don't need to just use Jupiter as an aggregator on Solana.
Alrighty. Yeah, actually, Connor, what you said of like MEV will never go away, but the profitability is getting smaller and smaller. Yeah. You obviously like this solver world comes with the idea of intents getting users better pricing and also like MEV being on behalf of users. But what is y'all's take on MEV becoming an opportunity for users, especially when it comes into like profitability?
Yeah, I mean, for users, it's great, right? They get better rates of intents. Solvers are then competing with each other. They'll be doing MEV. They'll be trying to front run each other, back run, sandwich. I mean, it's the best game for the users, ultimately. But the participants of that game, that's questionable. The long term of them, not really too sure, right? I think we need solvers. Do I see solvers becoming more generalist? No. Do I see solvers going a lot more specialized and maybe verbose actions, like, for example, leverage or NFT purchasing or, I don't know, like LSTs and LRTs, and just specializing on that route or that execution and then monetizing on that. And then if somebody enters that, then they shift and so forth. So yeah, I see for users, they get the better user experience because they get better rates. They can go to one interface to then access the whole chain and all the chains through one place. But again, how realistic is it in the long term for profitability?
Yeah, I think that one thing that's like undersaid a lot of times is that people forget that solvers, a lot of them come from the market making side, and that they will operate at zero if they know that they can operate and lose money for 6 months, and then the rest of the competition falls out. So I think that designing these systems to be more sustainable long term, even if the users do have to suffer in the short term, makes a lot of sense for our industry, because we cannot necessarily rely on purely just incentives forever, because if these businesses fall out and we end up with just one market maker that's fulfilling every single request for every single person, then we're no better than traditional finance and Robinhood feeding orders to Citadel.
Yeah, I think that there's a big trade-off space that we as an industry need to like. So, you know, we've had these like multiple cycles. Like crypto has been this like you write like software infrastructure, and then like the market participants show up. So like you create the mining game, and then like $10 billion of mining physical infrastructure like appears. You create the validator, like the proof of stake validator game. Lots of validator companies show up. You create the MEV game, and lots of different searchers show up. But we have like a flip side problem, which is you need to have multiple market participants just for liveness, right? Like it's like really bad if, you know, there's only one market participant and, you know, they have some like business issue, like some software fault, something, and then like no one's, like the entire service becomes unusable. It's really bad for any sort of application. So I think that like this is going to be like a real tension in the intent space as we start to try and like mature the market structure, which is like how can the applications, the interfaces, sort of who are really strongly incentivized to maintain liveness, focus on incentivizing multiple market participants. I think a lot of protocols like start with either like a closely affiliated or like internally incubated solver, but then want to diversify the population of solvers, but like find it to be very tricky.
Yeah, I was on a panel yesterday with CowSwap and Propeller Heads, and the topic came up was how many solvers is a good amount of solvers? And they haven't defined this just yet. Yeah, CowSwap, Felix was saying, we have 25 solvers, and right now we're very happy. We see that we are not, let's say, missing any type of the market, like different types of actions. We have no downtime. We're giving really good rates. And one of the questions was, do we need 500 solvers by next year? And everyone on the panel said no. If we have very good network participants, like 3 or 4 within particular actions, and we have some redundancy, maybe that is enough. Some other people view it as, let's have a couple of hundred, and that's better. But there is tooling now that people are creating that anyone can build their own solver, right? I personally think, okay, it's a nice idea, but they're not going to be competitive. Like, they're not going to get any order flow. They're basically just like a 10-step down the food chain of maybe we can fall back on them, and if we fall back, we're losing 90% of our funds, right? So yeah, it's an interesting dynamic.
I mean, I was talking to one like relatively large CowSwap solver who was doing we do like a very large percentage of all CowSwap volume.
Copium?
Someone else. And they were like, we make like $3K a month from a profit, right? Yeah. Like it's a challenging thing, especially if like we need to be in a place where like increasing the efficiency of the market increases the order flow. Right, like one of the like thesis of all of this intent-based stuff is that we're probably losing either decentralized exchanges or to like other assets and other categories like dead weight loss because of the inefficiencies of current crypto markets. But like in practice, this has mostly not been true.
Actually, I have a question to follow up on this. And because like, I see what you're saying definitely, Connor, as far as like how many solvers do we need for there to be like competitive market while also creating order flow and profitability, but then also like so many people will just out time the market and make nothing to then just get concentration. But with all these problems that you guys just mentioned, like how or if do market makers solve any of this?
I think that it becomes a tooling issue as well as like an inventory management issue. Like we've already seen, there's been multiple market makers in the past couple of years that have tried to get on-chain trading, and they only do centralized exchange trading, and they try and come on-chain, and then they just get washed out and go right back to centralized exchanges. So if the tooling isn't good enough for like our own industry to trade on-chain and have all market makers that do centralized exchanges also do decentralized exchange and do solving and stuff like that, then it's still very difficult to use. I would say that it needs to get easier to use for them to provide the liquidity on-chain and just to participate on-chain in general, because we're more likely to get somebody like a centralized exchange market maker that's already in crypto to become a solver than we are to get Citadel to become a solver. So I think that we really need to focus on like getting traditional centralized exchange market makers to come on-chain and making those tools easier, because that's going to be the first people that know that they can hold crypto and are okay going on-chain, but they need a little bit of help because I think the tooling just isn't there. And otherwise, we're going to end up with not that many solvers.
I don't want them to come on-chain. Why? Like, I can just plug into their RFQ system or their servers and then plug it into mine. They can also plug into mine, right? In this space, I see a lot of people talking about solvers and market makers as if they're the same thing. For me, the differentiation is solvers don't hold inventory, market makers do, right? We specialize in on-chain, how to execute on-chain. They specialize in inventory management. So for them to enter on-chain, like, we have certain market makers reaching out to us. They have certain order flow. We have certain order flow, and then we come to an agreement, right? They use us for on-chain. We use them for off-chain and inventory management. I don't think it would benefit anyone for them to come on-chain. One, because the barrier is quite high, right, like you were saying. Two, then it would push out all the solvers out of the game, and then it would turn fully centralized even more, because there's only really a handful of market makers within the space that are doing a good job. Right now we have 25 solvers, maybe there's 10 good market makers in this whole ecosystem, so then we go even more centralized and more centralized. If you look at what Uniswap X done, they have, 95% of the order flow goes to market makers, right? But the public presentation is, this is an open, permissionless intent network. yeah, we basically get the scraps as left over from the market makers, right? And I don't think that's good design for anyone.
Yeah, I think the way that I view it is that holding inventory is an advantage, especially in the cross-chain sense.
You have to do that, yeah.
Yeah. So most of the intent-based systems that we're looking at are cross-chain, but I would agree that single-chain, you can still compete as like a non-inventory holding solver. But I would say for like cross-chain especially, like having market makers that will hold inventory simplifies a lot of things.
It seems though, yeah, I mean, I think that there is an asymmetric advantage to being able to have inventory and to be essentially be able to solve against your own float, and like use that as a factor. Like you can do, like it gives you like the ability to like arbitrage duration risk, which is like a huge, like in a more competitive marketplace. Like I think the marketplace for like outside of like a small number of things like Uniswap X and CowSwap is like very not very perfectly competitive. But in a more competitive marketplace, like that becomes like a huge advantage. Like you're just going to be able to deliver better yields to users, better prices, et cetera, if you have the ability to manage order flow. I think the problem that like the reason why people have wanted, because they see how undercapitalized like all of the like mom and pop like two-person shop solvers are, and they're like, well, it would be nice if we were like dealing with like an enterprise rather than just like the small business. But like the flip side of that is, it's just been hard to like set up these businesses in a way that they like can grow organically, and so like people want these market makers to step in. But I think we're like the changes in the regulatory landscape will favor potentially organic growth of more solvers.
Yeah, like I've already heard this past week about US-based funds that were previously not investing in like US-based companies that are now coming back and investing in US-based companies again. So I do think this regulatory landscape is going to change a lot.
I mean, like personally, like the stuff that we've done to like how to set up our solvers from a regulatory point of view was incredibly convoluted and incredibly unfriendly to raising external capital. But like now you don't have to do that.
Yeah, I mean, I was thinking in the same chain context. I don't know any solver in the whole ecosystem on the same chain using our inventory. It makes a lot of sense to do it. We all went through this kind of individual mind exploration, but we were all going through it together without talking to each other about 8-9 months ago. Of do we all start using inventory? And everyone was like, yes, we're starting to do it. We all started exploring it. We started to realize the risk is so high. Like you put in half a mil, like you can lose that on one trade, and your money's gone. It's not that you fuck up in a route that you're using someone else's ETH and you may be losing 1% or 2% and you pay that back, right? The risk ratio is very, very different. And that also plays into what you were saying, right? Of the risk reward ratio on the profitability side. If I'm going to put 500K and make 3K a month profit, like that's too much of a big difference to even take that chance.
I'm going to read a quote from Nick White, and I want to know if you guys agree with this statement. Intents are just another name for limit orders, and solvers are just another name for market makers.
Bullshit. Bullshit. Limit orders are expressing just you want a token A to token B. Intents can be an expression of any outcome on chain. That can be a smart contract outcome, that can be a DeFi position, that can be a lending position, borrowing, leverage, NFTs. It could be a new primitive that is starting within 5 months that we don't know about just yet. It's purely outcome based. I want that. It's not just token A to token B. Solvers are not market makers because market makers hold inventory. Solvers don't hold inventory as of today in the ecosystem. Solvers are not going to go into more for both. They're not going to just do the generalist part of a market maker of trading. Solvers are going to turn more specialized and abstract how to interact with every single smart contract on chain. If you envision a world of thousands of different chains, thousands of different smart contracts on top of them, somebody needs to understand and translate that to be used by other people. That's the whole job of a solver, right? It has no relation to like market makers personally. So yeah, answer bullshit.
Maybe, so you answered like philosophically what intents can be, and how about like today?
They are today, we're doing it today. That's what's happening today. We've got like Web3 Zapier, drag and drop, of any arbitrary smart contract. They can be called in EVM chains and then automate this on particular conditions. It can be fetched on-chain as view functions and then use as outcomes into different parts. We now have like a full DeFi asset management tool that's like making virtual portfolios and then bundling all of these into one transactions. Then we also have another one that's launching in a couple of weeks. It's a two-sided marketplace that will destroy airdrops and points, where DeFi protocol comes along and says, I want you to do these actions, or it could be any protocol. I want you to do these actions on my platform, and then a user comes along and says, I'll put 50 million there in exchange for this amount of APY, right? So these, and fourth random use case as well, one-click deposit into 20 different smart contracts that haven't given an airdrop just yet, right? We've got like 60 projects using us, and these are very different use cases, and they're not related to trading.
But wouldn't you say that like 95% of current usage of intents is I want from token A to token B take a route?
Sure, and that's the problem of the ecosystem. We've not had a thought leader to push the difference of different types of intents that can be done. People that are in that position, they've not launched, right? That's kind of the challenge, and we've had people like Uniswap X, CowSwap, Across, purely in like token-based trading. What we're now doing is like the intent engine saying we're only going after developers. So a developer has this pain, which you've probably seen in Somalia, which we had in Enso V1, is integrating every single DeFi protocol into your platform, right? We spent over 500,000 audits. We spent over a year building this, launched it, no product market fit. Now with Enso, what we have today, you can just build an interface and express every single outcome you want on chain, which could be a DeFi protocol, NFT, and so forth. So, you know, we are kind of pushing that, but other people are just sticking to trading because, again, number goes up, but we're more focused on like new primitives that can be built in this ecosystem.
You got anything? No? Alrighty. Well, that's actually kind of great because we're right at time. So, all right. Thanks,
Thank you.
guys.
Thank you.
Of course, that was great.
Hope you enjoy my bullshit rants.
No, I loved.